everybody, it's Harrison. Welcome back to Maine Connects, your source for all things small business and real estate in Maine. What I want to talk a little bit about today is the mortgage process. A lot of people, when they call in, they're thinking about buying a home, they say, well, what should I do first? And my recommendation is almost always talk to a mortgage professional, figure out what your budget is going to be, and get started there so you have some idea what kind of house you can afford and where we should be looking. And I thought nobody better to answer that question than Corey Scott, my preferred lender. Great guy, great resource, somebody who can walk right through the process. So thanks for joining us today, Corey.
Oh my gosh, I'm excited to be here. What an intro. Hopefully high expectations.
Yeah, so people thinking about buying a home are often afraid of that call to the mortgage person. They're afraid that it's going to be a long process. Maybe they won't get good news. But what I think people don't realize is it's very much a consultative process. You know, you're trying to help them get there. You're not just trying to tell them yes or no. So with that being said, can you walk us a little bit through, borrower makes that phone call to you. What does that conversation look like? What does that process look like once they get started?
Yeah, totally. So I would say don't be scared to call, first of all. This all starts with a conversation, right? Someone calls in looking at maybe purchasing a home. We start the convo by what are your goals? Where do you want to be? Have you done any budgeting? Give me some background, right? So we go into that first. Are you renting? Do you own a home now? What do you know about the process? From there, we look at the budgeting section and say, what have you budgeted for a monthly payment? Where your comfort level's at? For us on our side, we could approve someone for $5 million, right? But if your budget is a $250,000 house in a small town in Maine, we want to make sure that we are setting those expectations correct up front to not overwhelm or underwhelm based on what they're trying to get to, right? So really, the first part is just really a consultation in regards to where you're at, what you're looking to do, and what are your goals. At that point, once we kind of do some quick qualifying over the phone, we'd then have them do an application for us. And that's when we would do a credit check, look at their income, look at their how much they have for assets, retirement, checking, savings, and kind of put together a full financial picture for them at that point. A lot of times what we're doing right now is we're backtracking. So to piggyback on that first part of the conversation, say your goal is a $2,000 mortgage payment in the greater Portland, Maine area, right? We would look at their financials and backtrack to get to that $2,000 a month payment. Say, all right, well, with your parameters, you're approved for, say, $500,000, but to hit the $2,000, we want to make sure your purchase price is $250,000 with 20% down, or whatever that number comes to. Yep. Just set those expectations up front.
Yeah, well, I think that's good too, because I think that people see a pre-approval number and go, wow, I can afford all that house. But I think what's important and the point you're trying to make is that maybe you don't want to afford all that house. Maybe your goals are not to buy that $500,000 house, buy something a little bit more, economical to you. And it's important that you're not just pre-approving them, but you're also giving them an idea of to be where you want to be financially. This is really where you want to end up.
Yeah. I think a big part of our conversation too is we look at ourselves more as financial educators, and we deal with mortgage people, because someone comes in and say they have savings and they have a car loan or credit cards at a higher rate or whatever. We're looking at the full picture. You can afford $2,000 a month for your mortgage payment, but if you look at paying off your credit card or a car loan instead of money to purchase it, you could have a little higher mortgage payment, but have a much better quality of life and a much better monthly obligations going on. So we look at the full picture to hopefully get their budgeting in line there too.
Yeah, I think that's great. So you go through that first step, you're going through the consultation. Here's where things should be. What's the next step after that? What kind of information do you need to collect from somebody to actually begin the process of figuring out how that all fits together?
Yeah, it depends on their income status, right? So a lot of time, if they're W-2 employee, we just want the most recent W-2s, pay stubs, and a bank statement, right, to kind of set the tone there. If they're self-employed, usually we would want to see the last 2 years of federal tax returns and or business returns. Because when you're self-employed, we look at what you claim for income on your taxes. So a lot of clients come in, they're like, hey, I'm self-employed. I made $5 million last year. I'm like, oh my gosh, that's awesome. Look at their taxes, and they wrote off $490, $9 million or whatever it is, right? Some crazy number. And actually, you didn't make any money last year based on your taxes, right? So getting through that up front is the biggest part of our research and calculations to see what we can actually use for income for them. But once those are in, that's really the starting point, is we've already done a credit check at that point. It's really just validating the info we took over the phone or online to support their income and their asset piece.
Okay, so you're not looking for a ton of information out of the gate, just enough to make sure that what they're saying lines up, it matches what that budget actually looks like, and just trying to tie all those pieces together.
Correct. Okay. Every loan option has different requirements for what they need to satisfy. So say we're doing a Maine State Housing Authority loan, which you're doing a lot more of those right now because those rates are super aggressive. That requires 3 years worth of taxes to show you haven't owned a home in 3 years.
Gotcha.
So there's, once we get the initial documents in, we kind of get them the hit list after of like, here's what we need for the program that's the best fit for you.
And in terms of programs, so what are the most popular programs? What is the program, kind of what's that down payment requirement? And then what are some of the pros and cons to them?
Yeah, so we're seeing over the last 3-4 years, conventional loans, which are the most vanilla, boring loan, which is what clients want, I think, in general, has been 99% of our transactions. Like I think last year we closed, all of our loans we closed except for 3 were conventional, just based on the market. Yep. So it's 4 or 5 years ago, we were doing much more FHA loans, it's a government-backed loan with a lower down payment. But with the market we had recently in most of the country, it was harder to get government loans accepted when people are putting 20, 25, 30% down compared to someone putting 3.5% down. Right or wrong, that's just what we saw in the market.
Yep.
So conventional is usually for like the higher credit score, bigger down payment clients. FHA is a little more lenient in regards to credit score, your debt to income ratio, funds to close. It's one of the easier loans to get and most favorable in regards to, especially the lower credit score piece. The payments, the rate and the PMI are lower on that scenario than conventional loans across the board. So we also utilize FHA if someone wants to start getting multifamilies. So say you want to buy like a 4-unit to move into, which a lot of clients do. You can purchase a 3-4 unit with only 3.5% down, which is crazy awesome.
It is.
So helping a lot of clients get into their first multi that way. Especially if we know what, part of our initial conversation, I want to own a portfolio down the road. The cheapest way to ever get a multifamily is your first property is an FHA.
Yeah, it's an amazing program to get you started on that investing path because you do have to live in it for a period of time, but you don't have to live there forever. And it's a great way to get started without having to put all that, the 20 or 25% down you traditionally would put down. It's a great way to get started for a lot less money up front to start building out that portfolio.
Totally. And learn to make sure that you actually want to be a landlord, right? That you want to own more properties. So like you're living there, you can kind of see how it goes. So it's a good starter way to get into it.
Yeah. Okay. So a good recap on the programs. One other thing I want to talk about too is there's kind of levels to your level of pre-approval or whatever you might call it. There's, you get pre-qualified, you get pre-approved, you also get pre-underwritten. Mm-hmm. Can you explain a little bit the differences to those various levels and why somebody may want to go to another level?
Yeah, totally. So a lot of time we'll see like pre-qualification is kind of like the most generic. Like a lot of times some lenders do it. I make $50,000 a year, I have 20 grand saved up, and a lot of lenders will give a pre-qualification letter saying, all right, we think you're good to go from what you told us. Credit scores are 600, 700, whatever. They may not even pull credit. They just say, all right, from what you told us, you're good. It's the lowest level of the approval process upfront. So pre-approval, we get everything pre-approved. That's when we actually collect the documents. We run it through an underwriting system to make sure that it all jives. It's really validating what they've told us upfront to make sure that when they go under contract, that we're not going to have any issues. As long as the appraisal hits and title work hit, we're going to be good. The third level is actually pre-underwriting, which we're doing more and more of that now to help our clients get houses under contract. That's when we actually get it, get all the documents in and actually get it into an underwriter to sign off on everything while they're looking for houses. So it's a little more work and manpower on our side of it, but our goal is to give every client we work with the option, the availability to get the house under contract. So if I can call a listing agent and say, hey, Mr. Listing Agent, these clients have already gotten everything signed off on, I have everything reviewed, it's all good to go. As long as the appraisal hits, title work is good, we're going to close this transaction. Like you can let the seller know that we're on this, right? That's a super important call, especially in the market we're in right now, where we're still seeing multiple offers. We want to let the sellers know that we are, they accept our buyer's offer, we're going to close that transaction.
Yeah, and I think that's an important point to make is that so much of the offer process is the other side validating how likely are you to close, how solid a buyer are you. Obviously, cash buyers are that highest level of buyer. Oftentimes you've got conventional loans coming in right behind that with high down payments. You got the government programs, but anytime you can differentiate yourself with maybe a pre-underwritten versus a pre-approval, it just helps them realize you are a much more solid candidate to buy that house, because what does the seller want? They want to know that if they accept an offer, it's going to close, because they've got to go make their own plans. And being able to move your way up that ladder and show that you are a much more solid borrower and much more solid buyer just gives the seller a comfort of knowing I can work with them.
Yeah, totally. We like recently we had one client in Lewiston that accepted our offer. Our client's offer was $40,000 less than their best offer.
Wow.
But it was based on timing. We closed it in like 16 days, and they knew that we were going to close it. Like they called us. They're like, we want to make sure we close this on this time. That's the most important part to them, to make sure we're actually going to get to that number. So they accepted the offer, knowing it was lower, and they actually sent me the other offer, blacked out all the confidential stuff. So I was like, there's no way. Definitely happened. So I was very happy to hear that. Like who you're working with really does matter in this market.
It's huge. It really does matter. And I can share a lot of stories of getting buyers under contract. We didn't have the best offer because we had a good relationship with the other side, or we showed our seriousness, or there's a lot that goes into that offer process. And that's why working with an experienced agent and lender together can be so powerful, because you can actually bring to them what feels like a much stronger offer, given the fact that you've got the reputation and the experience of those people behind you.
Totally. 1,000,000% agree with you on that.
Yeah. So, all right. So somebody calls in, they go through the process, the original consultation with you, and understand budget, finances, where they should be. They get a pre-approval or pre-underwritten. They go out and start looking at houses. They find the right one. They write a contract, and it's accepted. So now at this point, oftentimes during that offer process, you're also calling the listing agent on their behalf to help get that offer accepted. Just like I am, just like you are. We're trying to show this borrower and this buyer in the best light. But then once it goes under contract, you have to get this thing to closing. So what are the steps in that process, and about how long does that take?
So luckily at that point, we've done a lot of the work behind the scenes. Like we've already gotten a lot of the financial documents in for the client, because when they go under contract, there's a lot of stress, a lot of things happening quickly, inspections, right? Like there's a lot of just moving pieces. We try to take as much of that as we can off up front for them. So at that point, there are a couple things that are happening. We are ordering an appraisal to make sure the house is worth what they're buying it for. So we do that behind the scenes. Like we order that once we get the contract in immediately to hopefully get that back quickly. We order title work with a local title company or settlement company to make sure that the property doesn't have any liens on it. The seller can actually sell the property, make sure there's no setback issues, like just to make sure that when they own it, if they go to sell it down the road, there won't be any issues when they go to resell. Make sure they can have clean title on the property. At that point, you're going through inspections with your client, right? So you're going through that wheelhouse there. You guys are negotiating that. So we have a bunch of parallels running at the same exact time to get to that. It's kind of like a dead time, right? Though, and also at the same point, because those things happen, there's like a week or 10 days of just kind of waiting for all those other reports to come in.
Yep.
But a lot of the work is done behind the scenes.
So you get through, offer gets accepted, appraisal gets ordered, underwriting's
Yep.
finishing up, title company's working, all these things are happening. Everything comes back clean. And then they get that message they love to get from the lender, which is you're clear to close. Here's a copy of your settlement statement, and we schedule the closing, and everybody's happy.
Exactly. That's how it always works. Never any issues.
No, I will say it works that way a lot, but a part of that is because you're working with a team of experienced people that know how to get it done. And I think that's the benefit to working with a local lender versus maybe a national lender. Working with a local team, working with great resources that are experienced, because they're going to know how to solve the issues that come up. They know how to hit a deadline. They've got great access to people in the market. An example is when appraisers see an order from you, they're more likely to take it than if they get an order from some national company they've never worked with. Right. There's a lot of benefits to being local with this process and having that kind of reputation and clout behind you, because it makes the process go so much easier.
Absolutely.
I think that team is key. So house closes, everybody's happy. They start making their mortgage payments about a month later. And in the future, they're calling you maybe for a refi or a cash out refi or to buy their next home.
Yeah, when someone's in our system too, part of our job, kind of like back to the very first part about the consultation and like kind of being more of an advisor than just a mortgage dude, is that we try to keep an eye on that, right? So when rates drop, we're going to reach out to our clients, let them know, hey, this could be a good time to refinance. We run algorithms or scenarios to make sure it makes sense based on the closing cost to go into a refinance. We're not going to churn a loan just to do a loan for someone. We want to make sure it makes financial sense based on where they are in their life. You're going to be looking at selling in a year, so it doesn't make sense to refinance because they're not going to reap the benefit of that, right? So it's a lot of consultations even after they close on their home.
Yeah, I think that's great. So for somebody who's watching this, who's thinking about buying a home, one piece of advice we always have is it's never too early to call. So as you've said, the consultation process, that can be a bit involved. It can take some time. It can take some work to get them through and figure out their budget, but it's never too early to call. But when it is time to call, Corey, what's the best way to get in touch with you and your team? Yeah,
our best number is 207-400-7750, or they can send me a note at Corey@HarborOne, HarborOne.com.
And ideally, for somebody thinking about buying a home, how much time would you like them to leave? Kind of what's that minimum amount you'd like to have to get that process started?
I mean, if they're like 30 days or so, it's kind of like the minimum, just to look at everything, get a pre-approval done in case, their finances are not wonky, but like we have to work some things out. I've had people come in today and I get them pre-approved today and they go under contract today. So it really depends on their situation, but obviously the more time we have, the better, just to prepare for that. Okay,
great. So if anybody watching, thinking about buying a home, never too early to call, definitely leave yourself some time. But ultimately make that call, have that conversation, get those pieces figured out so that at least you know where you're at, so you're not starting this process blind.
Exactly.
Awesome. All right. Well, really appreciate the time today, Corey. Appreciate your knowledge and your expertise. I look forward to talking to you again soon.
Thanks, Harrison. Have a good day.